are markets really responding to this 90-day pause in the tariff war? What exactly is Trump's objective here, and how are relations with China going to impact all of us? Let us just tell you from the outset, Goldman Sachs is not expecting this tariff war to settle down anytime soon. Dr. Kirk Elliott has been tracking all of this, and he joins us now to discuss. Dr. Kirk Elliott, thank you so much for joining us today.
It's so great to be with you as always.
Well, we haven't had a chat since the new, smoothing out of the trade war has come into the news. A lot of people have mixed feelings about this latest news about the tariff war with China. Talk to us about where you see all of this heading, Dr. Elliott.
Well, I mean, it's good news for the economy, right? But we have to realize that part of the tariffs is to generate revenue, right? Part of the tariffs is a negotiating tool. And so in this sense, this is a massive negotiating tool, but we have to realize Trump didn't remove all tariffs from China, right? They're still 30%, right? Which means everything coming in from China is going to be 30% more expensive. That's inflationary because Trump hasn't had time yet to rebuild the factories, to retool them, to retrain the workforce, because this is the hangover effect from Biden, right? So in time, this is going to be really good for the economy. But when you look at what the markets are going to probably do from all of this, there's always a knee-jerk reaction, right? So I think the Dow, when Trump made this new 90-day pause on the tariffs, went up like almost 1,000 points. I mean, it was incredible. Now it's stabilizing, it's coming down because people realize, oh, things from China are still going to be 30% more expensive, right? And who knows what happens after 90 days, right? Because China is not going to lay down lightly on this one. Their whole economy is in shambles. There was a report last week, Maria, that the top 6 banks in China, the 6 largest ones, lost $1 billion in the first quarter because their economy stinks. Right. And over 40 banks shut down in China within the last 2 weeks. So this comes at a time when Trump is using tariffs as a negotiating tool at absolutely the best time, because what's China going to do? Right. Their economy already stinks. They've got to negotiate a little bit, or else they actually go into an inflationary death spiral. And so here's where ultimately Trump is going to win. He's going to win, but we still have the hangover effect from Biden. I was reading just a couple of days ago, the moratorium on student loan paybacks ended, from the COVID time of 2020. Well, you know what? Biden, when he was in office, was bragging about how he was doing great things for the economy. Well, you don't know what you don't know. If the students aren't actually paying their bills, you don't know if they could or not. So now they release this and say, no, you got to start repaying your student loan debt. The default rate went from 0.8% to 8% overnight, right? So almost 1 out of every 10 students is not paying back their student loan debt. This is what Trump inherited. Now, mainstream media is going to blame Trump for all of this, right? It's like because he's in office. But when you look at policy, whether it's legislative action, any kind of administrative ruling, anything, interest rate cycle, there's a lag time to action effect, meaning it takes about 12 to 18 months to see the fruit on the tree from any policy initiative. Well, Trump's been in office for like 120 days, not a year to 18 months. Right. So everything that we're seeing is the aftermath of Biden, right? And the horrible things were, you had economic shutdowns, during COVID. You had massive stimulus spending to keep the economy afloat. You stopped payments from the kids coming out of college to hide the fact that the economy was really bad and people couldn't afford to live, right? So this transition, this turmoil is what's been causing gold to go up a lot, right? It's this flight for safety. It's central banks allocating into gold because they knew that there's going to be a change coming. I know it. There's a global monetary paradigm shift happening as wealth starts to move from the west to the east over the last years, and now coming back to America.
Yeah, you
right?
mentioned something. Oh, sorry, I just wanted to bring up, this is from Kitco today. Can gold catch a safe haven bid as US manufacturing sector continues to struggle? So that's what you were just talking about. The manufacturing sector still hasn't caught up, and we said this from the beginning. This doesn't happen overnight, and
Yeah.
so it is still there is still so much uncertainty here, especially with what's happening with China, despite the latest developments.
Yeah, I mean, and so the latest developments, as tariffs went up to like 145% with a top side of possibly over 200%, right? So you had gold just going up. It hit all-time highs. It was just screaming. I think it was up at most 29% year to date, and it's only the first quarter, right? Well, now it's come down some because there's this sense of the tensions are easing a little bit. So I think gold could stabilize for just a little bit, where this signals an increase in manufacturing, an increase in economic growth when you remove some of those tariffs. And silver, being a manufacturing metal, should actually now start to outperform gold again, like it has over the last few years. But this is the struggle that Trump is having with Jerome Powell, right? So Jerome Powell and he are they're just going at it, right? In fact, last week, Trump had an amazing Trump quote. It made me laugh out loud. He said, Jerome Powell is a fool, but I still like the guy. I was like, what does that mean? Right. So what he's
Classic
saying,
Trump.
classic Trump. Um, so why is he a fool? Because Trump wants him to lower rates just a little bit even. That'll stimulate the housing market. It'll start creating jobs. So if you can stimulate the economy, yes, lowering interest rates in times of inflation is actually worse for inflation, but stimulating the economy is a better option because it gets people working and their wages will keep up with the inflation. If you keep doing what Jerome Powell is doing, you create a recession. You create a big one, and who's going to get the blame for it? It's going to be Trump. When his words are saying do the opposite, Jerome Powell, he's saying no. And so that's going to create a recession. They're going to blame Trump for it, but it's not Trump's fault. So bottom line is this is probably why you've got J.P. Morgan, you've got Goldman Sachs, you've got all these big, massive research firms and international banks saying gold could hit 3,700 by the end of the year with an upwards tail of
Well,
4,500.
let me show
Like,
everyone that actually before you go on. So this is the Economic Times today talking about gold price prediction, how gold rebounds after hitting 1 month low. Can it surge to 4,500 by year end? Here's what Goldman Sachs projects. If we go down this article a little bit, we can see that what are the long-term gold price forecasts for 2025. It says that forecasts vary but stay largely optimistic. Goldman Sachs believes gold could hit 3,700 per ounce by year end, with potential spikes up to 4,500 if global risks rise. And it's interesting because they mentioned there like a recession or
yeah,
renewed trade tensions, both very
yeah.
real possibilities. Reuters poll suggests more moderate average of 3,065 per ounce, but there are, coin index is expecting a short term dip, but then end of year possibly reaching 3,925. So it's even this is volatile.
It's volatile. And so what does that article say that it's not actually saying? It's saying, yeah, there's a 90-day kind of hiatus on
Mm-hmm.
this trade war, but they don't expect it's going to stick. They probably, or if they did, they wouldn't have these massive projections for gold moving forward. So after 90 days, my guess, and I would say that Goldman Sachs thinks the same thing, or else they wouldn't have those projections, is that Xi Jinping draws a line in the sand because he doesn't want to lose political favor. He doesn't want to show the Chinese public that he capitulated and that he bowed to America.
Right.
Because he said he's never going to bow to America. But yet, by negotiating with Trump, he did. He did. Because here's his dilemma. Either he draws in the line in the sand to remain politically favorable in China, or he kills the Chinese economy. So he is in a pickle. He's like surrounded. He can't get out. Trump won. Now, we don't see that Trump won quite yet, but we will. Because ultimately, I think he's going to pick the political favor because he's a communist, right? And he wants to show the world that China's strong, that China is mighty. and the tariff wars probably resume, which is what tells me probably what's behind the Goldman Sachs projection of gold, because I think that these tariff wars increase down the road. We just have a hiatus right now.
Right.
And that kind of uncertainty always causes markets to react, because uncertainty isn't good for stocks, bonds, mutual funds, because they rely on consistency of future expectations. Where on the other hand, gold and silver do really, really well. And they look at uncertainty in the face and say, we're a safe haven investment, and this is why people should invest in us, right? So this is where I see the next 90 days is silver starting to resume the massive pace that we've had over the last few years because of this. And it'll take probably a little bit of time. I think gold settles down, goes sideways for a bit, and then it resumes with a gusto as well as we get closer to this 90 days, because I think the tariff battle intensifies later this year.
I think you may be right, and your predictions, Dr. Elliott, have been really on point. So we are very, very grateful for your time and all of the effort that you put into analyzing all of this for us. It is such a complicated world right now. Just briefly speak to people about KEPM. The link is kepm.com/pulse. When you go there, you put in your information. One of Dr. Elliott's specialists will be in touch with you. Just speak to people briefly about that.
Yeah, so call us. I mean, if anything we said resonated with you, there's turbulence, there's turmoil, there's chaos, call our office, because we can allocate you into safety, into precious metals. I would do silver, not gold right now, just because of what we talked about. But it's really easy. And understand this. Not all gold is good gold, not all silver is good silver. We do bullion, low cost, low premium, 8% when you go in, 0% when you liquidate. So you know clearly what your break even is. Right. And it's not, we don't operate like a stockbroker or a real estate agent where there's a commission going in, a commission going out, and they forget about you in between, right? It's 8% going in, 0 when you liquidate. I want all of the profits to be yours when you liquidate. And then we'll stay in touch with you and hold your hand throughout this economy as long as you're one of our clients, so to speak. Every single week, like clockwork, I send out a video email letting you know what I'm thinking politically, economically, socially, and what we should be careful of, but also what we should be joyful about. Because when you're in the right place at the right time, that does put a smile on your face, and that's what we'll help you with.